Hi guys, it's Anand here. Now this video is about why you should have multiple bank accounts and how I managed to use this method to fork out £5,000 for a holiday with relative ease. Using this method, not only will you be able to save better, but you will also be able to spend better. So if you're watching this, you've already heard that you should have a budget planner. So you know how much money is coming in, how much you're spending, and of that amount that you're spending, how much is necessary expenditure, how much is frivolous expenditure, etc., etc. So I've always been a fan about having different pots of money for the really big ticket items that you want to buy. So if you're saving up for a car, you would have a different pot of money to which a regular amount of your income goes, so that builds up and eventually gets to a stage where you've got enough money in there to buy that new car. But it wasn't until 2006-ish that I got really better at planning my regular expenditure. You know, the big ticket items that cost a lot, but that you're going to spend pretty much year in, year out. You know, like holidays, anything related to having a car and maintaining it, donations you want to make to charitable causes but haven't quite decided which charitable causes to support yet, all of those sorts of things. Now this is how people typically pay for a holiday. We should go on holiday in the summer. How much is it going to cost? I don't know. Let's search out some places we want to go and get some prices in. Oh, £4,500. That sounds about right. But we've only got £800 at the moment. We can't afford it. Let's just start saving astronomical sums of money over the next 6 months and we might just get there. And if we don't, we'll just whack the rest on a credit card and think about it later. Well, what about car expenses? Well, we actually handle these in a similar way to how we handle holidays. Apart from the unexpected car repair and maintenance issues, we don't generally think about them until they happen, which is why they're unexpected. Just before I get into the meat of the video, can I ask you to smash that like button? It really helps the video get more views and it'll probably put a smile on your face too, knowing that you've done a nice thing. I got fed up with not having a contingency fund. I got fed up with not being able to put enough into investments. I got fed up with not having enough savings generally. And I constantly felt like I was being sucker punched every time I had to fork out large sums of money for big ticket expenditure items which I knew occurred every single year. How, if I know these occur every single year, can I feel so bad every time I fork out money for them? There's got to be a way around this. So I decided to focus on me and my family first. I wanted to get paid before anything else. My big wants, needs and goals needed to be covered off first, before I dealt with anything else. I could deal with the rest with whatever money remained. But if I didn't do this, I would be, like everyone else, dealing with all my bills first and then figuring out how to build my financial future with whatever's left. It sounds the wrong way around, doesn't it? So I had plans to build up a contingency fund. I had plans to grow my exposure to equities and other investments, other non-property investments I should say. Some of you may know I already have a portfolio of buy-to-let properties. I had plans to ensure I gave back to society, starting by allocating a proportion of my net income to charitable causes. Now, I hadn't figured out what those charitable causes would necessarily be yet, but that shouldn't stop me from allocating a proportion of my income to them. I could always gather that money somewhere else, and then once I had decided who it should go to, that money could be allocated. That way, charities weren't ultimately losing out. And like everyone else, and like I said earlier, I had big regular expenses that occurred annually, which I had to get better at planning for. I knew I had to pay myself first. Paying yourself first, it's a simple concept, but actually it's very powerful putting it into action. It changes your perspective on how you view your money and how you use it to further your financial goals. On the big spend items, my wife and I discussed how much we wanted to spend, for example, on holidays each year. Now it's important to take a dose of realism here. If you take a holiday once every 2 years, or you take one annual family trip a year, it's unrealistic to suddenly say you're going to try and plan for 6 holidays a year. So take a healthy dose of realism, but don't restrict yourself too much. Go for what you've done over the past few years or what you think you would have done this year if nothing else had changed. For us, we decided to go for 2 holidays every year. We've managed that for 2 of the last 3 years and we reasonably expected to do the same this year. So 2 holidays a year isn't a huge stretch. It's what we've done and it's what we want to continue doing. I then took the last 2 holidays we'd taken and figured out how much they had actually cost us. It turned out to be about £2,500 each, or £5,000 for both of them for the year. Now, if you take that £5,000 and divide that by 12 to get to a monthly figure, it actually costs £416 per month. Now, when I first saw that, I thought, we're really? £416 a month? That's nuts. There's no way I can take that from my current account and put it to the side, ready for it to build up every month. Now that's the stupid part of my brain talking, because I know £416 times 12 is £5,000. We just did the maths. So, I also know I spend that £5,000 on holidays, or at least I did in the last year. And that's what I want to do year on year going forward. So it's not illogical to separate that amount on a monthly basis now and build that up so I don't feel that sucker punch effect when I end up paying for these holidays. So after I got over that initial shock over how much my annual family holidays cost on a monthly basis, I opened a new bank account with a decent interest rate. My criteria for opening these bank accounts is fairly simple. These are never going to be my primary accounts. They are largely savings accounts if that's where the best interest rate is. And it's just going to collect money on a monthly basis for a maximum period of about a year, upon which, when I need them, I will access that money and withdraw it and spend it for the purposes for which they were intended. Simple as that. And therefore, there's only two real criteria. It has to have as good an interest rate as possible. And yes, in the current market conditions, that's very hard, but as good an interest rate as you can get, and a decent internet banking service. A mobile banking service would be even better, but it's not mandatory. This account became my holiday account, the go-to account for all of my holiday related expenditure. Everything from flights, hotels, travel visas, travel insurance, and the like. I then set up a standing order for my main current account for £425 per month to go into my holiday account. That little extra buffer would cover all of the other items I just mentioned. Within 6 short months, I no longer missed that money. I had it leaving my current account the very day after my main wage was expected to land in my current account. And therefore, as it left pretty much immediately, I no longer missed having that cash in my account. I followed the exact same process for car-related expenditure. Like a lot of people, my wife and I get our cars serviced each year. We pay for road tax, we pay for MOTs, we pay for repairs when they arise, we pay for new tyres when they're needed, and of course, car insurance. Recent years of expenditure in this space put the cost at around £2,500 to £3,000 per year. So I immediately started funneling £250 per month from my current account into a new savings account. Again, this amount left the very day after I expected my main wage to land in my current account. Again, within a few short months, I no longer missed that money either. Whenever these expenses do come up, I whack them on a credit card, which I always pay off in full, and immediately transfer the same sum from my holiday account, for example, if it was for a holiday deposit, or from my car account, if it was for car insurance. Those monies were transferred directly from those accounts straight into my current account, where they're ready to pay off that credit card bill when it eventually arrives. And I no longer feel like I'm being sucker punched when I pay for these big ticket expenses. Thus far, I've never fallen short on how much I need from those designated accounts. And the money transfers between accounts is fairly straightforward to manage. So I know some of you will be thinking that I don't need multiple bank accounts because I've got a Revolut app-based account or a Starling app-based account. And they have facilities within there to allow me to separate my pots of money in the same way I'm describing, but without opening multiple bank accounts. Well, yes, they are absolutely an alternative way of separating your pots of money. But there's one thing I think that a Revolut Vault or a Starling Space cannot do, that multiple bank accounts do. Having a separate, less used bank account provides a psychological barrier that you simply don't get with these app-based services. If I created a space within Starling or a vault within Revolut, and I designated that to be my holiday account or my holiday pot, if I then hit a temporary cash flow issue, as we all do from time to time, I will dip into that in a second, as it's only a Face ID or a thumbprint away. A few taps and bang, I've robbed my holiday account. What I've found is that by having that money just out of reach, it forces me to think more innovatively about how I handle short-term cash flow issues. It avoids me robbing a holiday or a car account and then running the risk of forgetting to put that money back in afterwards. I also prefer to keep these pots of money out of immediate reach because it allows me to access better savings rates. And I know savings rates aren't great right now, but something is better than nothing. As I said when I was talking about opening bank accounts earlier, I'm looking for bank accounts with easy internet access and decent interest rates. Revolut, for example, gives no interest at all. What I do use Starling Bank for, however, in amongst everything else, and I'm a big fan of Starling Bank, is for the smaller pots of money that I need to save for on a regular basis. However, for those bigger annual expenses that you have on a regular basis, having a separate bank account has been far more beneficial for me, and I think they will be for you too. Now, having said all that, I don't want you to suddenly go out and start opening dozens of bank accounts. For me, I have 4 accounts: a holiday account, a car account, a property contingency account for all of those expenses I expect to incur in my buy-to-let portfolio, and a charity account. This technique of siphoning off monthly amounts of money you know you are going to be spending over the next 12 months takes a massive load of panic and anxiety off your shoulders, knowing that there's money nicely building up for when you're going to need it over the next year. And for holidays, for us as a family, it ensures that we actually take those 2 holidays every year. There's no more guilt on spending money on holidays because that's what it's been planned for. There's no debating on whether we can afford it because all of that work has been done up front. It really is as simple as that. If there's money in the holiday account, we can go on holiday. If there's not enough money in there, we'll have to wait until it's built up before we can go. Spending money on a holiday just got much, much easier. So I hope you liked that video and found it useful. If you did, hit that big thumbs up button below and turn it blue. If you like these videos and want to see more, hit the big subscribe button below too, and I'll see you all on the next one.